Welcome back to Trading IQ, where we will learn the unlimited nature of the stock market. This is Saurabh Bhattacharjee, and in today's video, I'm going to share the overall NIFTY Auto Sector and its technical analysis using Stan Weinstein Stage Analysis and key indicators such as 30-week moving average, weekly chart, and support and resistance. It is as simple as that. And I'm also going to share one of the stocks within the NIFTY Auto Index, which is Sona BLW Precision and Amara battery. So I'm going to share two stories. One, I have invested in Sona BLW Precision and I got out of Amara battery, and I'm going to share my perspective on those two stocks using Stan Weinstein Stage Analysis and key indicators such as 30-week moving average, support and resistance, and volume analysis for the stocks. So for indexes or for indices, we cannot analyze based on volume, but for the stocks, volume analysis is one of the key factors for us to decide on which stocks we should stay invested in or which stocks we should get out of. So please watch till the end. This is the chart of NIFTY Auto Index, and as you can see, this is in clear stage 2 continuation setup. So let's do a quick Stan Weinstein Stage Analysis and determine why it is in stage 2 continuation. So based on Stan Weinstein Stage Analysis, there are 4 stages: stage 1, stage 2, stage 3, stage 4. Now stage 2 continuation setup is also part of stage 2, right? Because it is stage 2 continuation, meaning it is continuing the stage 2. So right now it is in stage 2 continuation setup. Why? So what happened here? Let's analyze from the beginning. So this is clear stage 4, right? Let me just quickly draw using this is clear stage 4. Because after this point, it was continuously declining, and the 30-week moving average also bent downward, and up to this point, this was clearly in stage 4. Now after that, after the COVID-19 pandemic, it started its uprise, right? And it got out of its 30-week moving average, and the moving average improved, and then you see it is in stage 2. Now I think I've shared this in the past that while other sectors like NIFTY, IT, Metal, PSU Bank, and FMCG, Pharma, these were performing well after the COVID-19 pandemic. But after a period of time, NIFTY Auto Sector was not performing up to the mark because it started stage 3. Because this was the resistance level, and it hit that resistance level, and then it was bouncing back and forth within this range, and it got out of this range back in July 2000, last year July. So it's been over 1 year since this has got out of stage 3, and again after moving out of this range, it created another range which sustained for about from September 2022 till May 2023. So it got out of that range again this year in May, and now it is in stage 2 continuation. So what happens? This is stage 4. This is, let me again quickly draw. So this is stage 4. This is stage 1, and this is stage 2, and then during the stage 2 it's created stage 3, and then it continued on its stage 2 continuation. Again it created stage 3, and it continued its stage 2 continuation. So now it is looking quite better, and it is in stage 2 continuation setup based on Stan Weinstein Stage Analysis. So again, I have created a detailed video on how you can analyze using Stan Weinstein Stage Analysis, which is very simple. So I'll paste the link on the I button. You can go and check it. So let's come to the stock in which I had invested, and I did a video I think few months back, around March time frame. I'll paste the link on the I button, when it was in my watch list. So I was looking at it very actively, and eventually when it met my condition, I invested on this stock. So what happened within this stock? So you see, this is clear stage 4, right? After the debut in the stock market, it had this rally from 300 to 800, which is a huge rally within a very short period of time, and then it saw this clear stage 4 decline, right? From 800 to what, 400. So what happens after stage 4? So after stage 4, after at a certain point, it will not go below that level, which was this level, which is around 400 level, right? So the lower level of this band is 400, and the upper level, so it tried to break out of that upper level, and it created a base between 500 to 400. So you see, it tried to break out of that 500 range here, and eventually it did break out of it here. Now look at the volume. This is the volume, right? This is the volume. You see the grouping of volume. Of course, the past there are very less data within the stock, but if the volume, when it is breaking out of a key resistance level, which is a 500, is a psychological number. So it is breaking out that number 500 with significant volume when it is compared with its past behavior. So the volume it broke out of with is around 31 million, and you see the highest volume that it has seen in the market is about 46 million. So again, the data is very less, but again, these are the risks that these are calculated risks that you should take in the market to gain huge profit in the long run. So this is a new stock in the market, and the potential of the upper level could be anything. Like it could go up to 2,000, 3,000. Who knows, right? We cannot know the future, but we can follow our plan and take some calculated risk based on the analysis. So after stage 4, it did not go below this level 400, and it created a base, and from this base it went past of it with some significant volume, which is close to 46 million and about 31 million. And the grouping of volume, you see the improved when it is breaking out of this 30-week moving average. You see the grouping of volume is also rising up, right? Now from this point onwards, you see there is a retraced back towards this breakout level around 500. So I could not buy it when it was breaking out of 500, but I had a chance to buy it when it retraced back to that breakout level, and now it is performing well, right? It is going up, and it has found its momentum back. I also wanted to share another stock analysis, which is Amara battery. So I had invested somewhere around this level when it broke out of this key resistance level, and it created a stage 1 base around this level, and it broke out of 550, 574 with significant volume. You see the volume, these two volume bar, which was significant. So it was performing well. It retraced back to its breakout level, and then it got its support, and then from which it bounced back and went past of 700. But you see, it has created another resistance level around 660, 665, and this was a support level back in the time when 2017-18 time frame, and it reached that level, and it retraced back from that level, and it eventually broke out of that level. Now when it is breaking out of that resistance level, you see the volume is not significant, and which is not important because we already have a huge grouping of volume here, which is more significant. But you see the volume at which it declined from this level. It's 46.93 million, which is the highest, like it's close to highest, right? 48 million was the highest volume selling pressure that it has seen in the market here around this time frame, 24 May, the week of 24th May 2021, and it has seen such volume again from a key resistance level, which is around 665 and 700 being the psychological number. So again, when it did that, this is so based on Stan Weinstein Stage Analysis, when there is a breakout, and after the breakout, if there is a huge selling pressure towards its breakout level, you should get out of it immediately. Because if the volume, if the selling pressure was not that huge, I would not mind this candle, but this volume candle gives me an indication that there was a huge selling pressure from its resistance level, and it might struggle in the future. It might go up and see a new all-time high, but it's part of my plan. When there is a huge selling pressure after a breakout or after the breakout level, I should not be invested in that stock. So emotionally, I wanted to invest it in this stock because I stayed on this stock for I think over 6 months without seeing much profit, right? The intended profit was more than what I wished for. So but I had to get out of it because it is part of my plan. So I got out of my emotional attachment within the stock, and I got out of it mechanically because that's the part of my plan. So I will invest it to another stock and get out of it because the momentum is not there within the stock as per my analysis. So again, this is just my analysis, and I'm not saying that if this is my analysis and this is what is going to happen in the market. It is just part of my plan, and I'm following my plan religiously. I don't care what the market is going to do because that is not in my control. I only have control in my plan, in my analysis, and that is what I'm doing in the best possible way. And I see myself being a successful investor down the line because these are some key important fundamental aspects that you need to follow when you are investing or trading in the market, which is create a plan and be consistent with your plan, and do not follow the market, do not follow the market behavior or the fundamental news or whatever other person is saying. So if I'm bullish on a given stock, you should not be bullish on that stock. My goal is to share my plan and my fundamental methodology in which I invest, my psychology when I'm investing in a given stock. You should look to work towards that, and you should pick up that plan versus the stock at which level I'm buying, at which level I'm selling. You should not follow that, right? This is not my intention to give you tips. I'm not giving you tips to just invest in this stock, just get out of this stock. No. If it is your plan, if it is part of your plan, then only you will do that. But so I'm sharing my plan, and if you want to pick up my plan, this is what my plan is, right? This is how I convince myself that I cannot be emotionally invested in a given stock if the plan is working out, if the plan is not working out, right? So there are two aspects. One is being mechanical with the plan, and sometimes we get emotionally attached with the stock, right? We feel that this stock has a potential to go up, some level, some imaginary level, but we cannot work in the stock market like that. So we got to stay out of our emotion and be very, very, very mechanical towards our plan. So that's my goal, and that is why I have created this channel, to share my perspective on how I look at stock market. So this is the analysis of NIFTY Auto Sector and these two stocks. That one of the stocks was in my portfolio, and another stock is in my portfolio. So I hope you like my approach. I hope you like this video. If you do, please hit the like button, share with your friends, and keep working on your plan. And let me know if you have any questions. You can comment down below, and I will see you guys on my next video. Thank you and have a great day.